Hello, everybody. Welcome to the August 22nd strategy call for 720 System Strategies. Before we jump in on this topic, I want to do a couple housekeeping items just so that people are aware of what's happening with 720 and you can understand who you're being contacted with or new products we have, et cetera, et cetera. First of all is Amy Tice. As you can see, many of you have already possibly been, Amy's reached out to you. You may recognize the name and the face. She's been going to NACPA for years. She used to work for DCAF Credit Counseling. And my booth in this year's NACPA was right next to Amy. And I just saw her interact with bankruptcy attorneys. And I said to her, I said, look, you got to come work for 720. It's going to be infinitely easier than credit counseling. And so she did. She started about a month ago. So welcome to Amy. And I just wanted to bring her on to listen in, and she could put a name with the face. Sound good, Amy?
Yes. Hi, everyone.
Okay, good deal. So great, Amy. The next thing I want to talk about is we had some questions recently. Periodically, we send hot leads. We send emails that say hot leads to you for people who are in our Facebook campaign. And I want to walk you through this so we're very clear on what this means. When we generate a lead on Facebook, you can see my screen, right? Where it says Facebook lead generated. Someone just want to make sure.
I can see it.
Okay, perfect. So when we generate a lead, the lead goes into two funnels. First of all, follow-up via email and follow-up via text, okay? With follow-up email, the replies go to your office because they're not that urgent, right? But all texting follow-up, they come to us because we want to text them in real time, okay? But what we and the goal of a text, when we text, we want to set an appointment no more than 3 days out, because and ideally the same day. And the reason why is, of course, the farther you go out, the lower the show rate. But periodically, we get people that have no appointments available or want to call immediately, like a lead's like, I want to talk to someone right away. And that's when we send you an email that says hot lead email, right? It's or not email, it's just going to say hot lead in the subject line. When that's the case, jump on the phone with those people right away because they're expecting a call from your office. So anyways, I wanted to point that out first. The second thing I want to point out is our texting campaign. Many of you have seen, we have our lead follow-up. Well, we now have a funnel, pure texting for leads other than our Facebook. So if you're part of our Facebook campaign, you don't have to worry about it because we're doing this for your Facebook leads. But if you wanted us to text your non-Facebook leads, we can do that now. And I just want to explain to you the effectiveness of this. We sent in the last, 8 months, 219,000 outbound texts and received 30,000 inbound text messages. And 100% of these text messages are replied to by a live person. And I want to show you this number right here. We've set 8,793 appointments set for our attorneys. And if I go to the calendar links, right, and I go from January to August 2022, this year, we've set 12,000 appointments. So that means the difference between the 12,000 and the 8,700 is basically text versus email. So text clearly has an advantage when setting up appointments, but it doesn't, the emails still work, but just not because it's not as engaging. So anyways, if you're interested in learning more about that, or you want to make sure your leads are getting automatically put in, just reply to any of our emails and Amy will reach out to you. Okay, that being said, let me stop my screen and let me, I got to let Cynthia in. Okay, so let me set up this call. And then, Robert, I'm going to basically hand it over to you and we can go from there. The purpose of this call is threefold, right? First is explain how the employee retention tax credit works. Many of you have already applied for this and received the approval for that. but many of you haven't, because I've been in communication with many of you since NACFA, and I've heard no, 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 which is why this call's happening. Second of all, you know, Robert runs one of the largest firms, law firms in Minnesota. He has this part of his firm that's actually doing this for clients, business owners across the country. And he's a lawyer, and he set this up as a way for you to fee share and make money. And the goal of this is to make it easier than a PI referral type thing. And that was what his idea was when he reached out to me. And lastly, the third point of this call is to see if you qualify, because as I learned when I started talking about this with Robert, a lot of CPAs don't understand the nuances of this. They say you don't qualify, but many cases you do. And when you go through this, when you hear this with Robert, you're going to be surprised on how many of you will qualify. And more importantly, how many people will qualify of people that you know, just business owners. And, you know, there's all these confusions about ERTC. It won't work if I got a PPP loan, not the case. And this is what Robert's going to do. And Robert, is that a good summary of what we're talking about here?
Yeah.
Yes, I think that was a very good summary, Phil. Thank you.
Good deal. So why don't you take over? You know, you got the screen, or unless you want me to run the screen, would you prefer?
No, you go ahead and run the screen, Phil. We can start with the PowerPoint and just kind of work our way down. And we can start on page 2 of the PowerPoint, Phil, if you like.
Let me pull that up. Hold on one second. Okay, here we go. Opening right now. I'm sorry, I should have had this up.
You can bring that.
Okay, here we go.
You're not like.
Okay, can you see that, Robert?
Yes, sir. And then if you want to click on page 2 in the upper left there.
Yep.
We can start. So I'm sure everyone's heard of the PPP loan and likely have applied and or received funds from the PPP loan, the Paycheck Protection Program. And the Employee Retention Tax Credit, ERC, or known as ERCT, is very like-minded. And by that, I mean, it's a government program set up like the PPP loan to put money back into the pocket of small business owners, anywhere from 3 employees to 500 employees. And the objective is to encourage, through that tax refund in the realm of the ERTC, for companies to keep and retain employees. And I think that was, the same objective by the federal government, helping out small businesses under the PPP loan. Now, if we go to page 3, this what the ERTC is, it's a tax refund that the IRS will issue a check directly to any small business owner who qualifies for ERTC, amends their 941 tax returns for the last 3 quarters of 2020 and the first 3 quarters of 2021. And the amount of that tax refund is phenomenal, because they take a portion up to $5,000 per employee for all 3 quarters of second quarter, third quarter, fourth quarter of 2020, and then $26,000 per employee per quarter for quarters 1, 2, and 3 of 2021. So, for example, I just closed a janitorial company with 30 employees, and they're going to get upwards of $700,000. I just closed a bankruptcy law firm with 40 employees. They're going to get $900,000. Now, this is not chump change. This is a lot of money out there for either, your businesses, and or anyone that that has 300 to 500 employees. Now, strangely enough, when this Taxpayer Certainty and Disaster Tax Relief Act started in the beginning of 2020, they the federal government kept the parameters for small businesses of 3 to 100 employees very tight. For example, if you got the PPP loan and got it forgiven, you didn't qualify. If you had more than 100 employees, you didn't qualify. If you had revenues, gross receipts, I should say gross receipts of less than a 50% decrease comparing quarters 19 to quarters 20, you didn't qualify. Well, under that auspice, the feds, they had billions of dollars sitting out in this fund that wasn't being used because not as many companies qualified as anticipated. So in actually 3 subsequent acts from the first act of 2020, they kept opening up the qualifying factors significantly. I think if we go to page 4 there, might sum it up a little bit. So actually, let's go to page 5, or 5, Phil, thank you. As you can see, as the act stands now, one of the qualifying factors for the employee tax credit is that if you can still qualify for 2020 if you had 100 full-time employees. Now you can qualify for 2021 wages paid as well, but you have to have less than 500 employees, so they open that up. The percent of qualified wages from 2020 to 2021 went from 50% to 70%. Now the big one, where Phil has his arrow here, is that in 2021, which you can still apply, you only get $5,000 per employee as a max for the entire year or last 3 quarters. In 2021, you can apply for the first 3 quarters of 2021 and get $21,000 per employee per quarter. And that's huge when you think of the amount of wages that even a company with 3 or 4 or 5 employees, now they have to be W-2 employees, not independent contractors, and that does not include relatives or owners. But that's usually a de minimis amount for most businesses. So that's one of the 2 main qualifying factors that we see on our screen here. Less than 100 full-time employees in 2020, less than 500 for 2021. Now, if you go to page 6, this is the second criteria of qualifying, and this is how they opened it up. Now, remember, we talked about the number of employees. So if you're good there, okay, so you're going on to the second tier of qualifying. And that is, number 1, if you compare second, third, and fourth quarters of 2019 to second, third, and fourth quarters by quarter to 2020, if you've had a 50% decrease in gross receipts, you qualify. If you compared the first 3 quarters of 2019 to the first 3 quarters by quarter to 2021, you only have to have a 20% decrease in gross receipts. That now, even if you don't qualify under that, there's number 2, and this is where they opened it up, I believe, on the last piece of legislation or act, and that's called the nominal business impact test. Now, the nominal business impact test, the way that they wrote this, I think it's notice 2021-21 that the IRS came out with. It's written very favorable to any small businesses that have 300 to 500 employees. Phil, are you familiar with that little bullet point we had on the nominal business impact test? Maybe we could share that quick if you can find it. It's not in this PowerPoint, but was in a subsequent attachment.
I'll look
and I
for it.
apologize.
I'll
You go look at it. We're gonna move on. But the nominal business impact test is interesting because what that says is that if it has really nothing to do with your gross receipts per se, but what the nominal business impact test says is that if there's any federal, state, local, city mandate relative to COVID that have affected at least as much as 10% of your employees or 10% of your business, that you may qualify under this section. And those qualifications, for example, or bullet points to determine whether you qualify is, for example, if you've had supply chain issues, if you've had, and these are COVID related issues, if you've had an inability to attend functions, organizations, conferences, if there were mandates relative to COVID that affected the amount of service that you could provide. Now, looking at this from a standpoint of a bankruptcy law firm, obviously the mandates relative to meeting face-to-face with clients, meeting face-to-face with clients at the 341A hearings or otherwise, but more so, I think, is the mandates relative to moratoriums on lawsuits, foreclosures.
I think this is it, right, Robert, right here?
Yeah, that right there. And that's a really good earmark for the bullet points relative to the nominal business impact. And I'm sure you can all think of reasons that COVID, I mean, obviously the bankruptcies are down, what, 30 to 70% in many districts. And we all know why that happened. Decrease in lawsuits, decrease in foreclosures, you know, and this and that. It just goes on and on. So that's the type of nominal business impact that could have relative to your own law firm or business.
And this is specifically why you said that many times CPA firms or whatever, they're being told you don't qualify, but now they do because of the change in law, right?
Yeah, out of the 100% of businesses that I vetted to see if this is a good fit for them, about 5% have already applied. And then I make sure they applied for the appropriate quarters too, because some only applied in 2020 and not 2021, because they may not have had a decrease in revenues during that period, but they would otherwise qualify under the nominal business impact test. But of the 95% that have already applied for ERTC, half that 95% didn't know at all that this program existed, or they may have, you know, heard of it, and that's about all they know. The other half, interestingly enough, thought they didn't qualify based on their own assessment or based on an assessment from an accountant.
Yeah.
And accountants are scared to death of this act. It's super complex. It's written ambiguous, but at the same time gives somebody the luxury of looking at these very detailed analysis that our firm and our co-counsel tax law firms put together. And, you know, and anytime you're filing tax returns or you're amending tax returns, you know, you have to be so careful, because this is measured twice and cut once, because you want to make sure that your numbers are dead on when you're making these amended 941X forms. And we can probably move on to the next, we can get off this page here.
Move on.
We come back to that. I'm sure somebody's going to have some questions. I would like to hear from the bankruptcy practitioners out there, what their thoughts are as far as more than what I had mentioned, as far as a nominal business impact test for bankruptcy firms based on the bullet points we just looked at. But go ahead, Phil. We can backtrack that.
Okay.
We can go to, yeah, and there's the next few pages here are samples of the nominal business impact test.
And we'll send this out. So, you know, I'll go through somewhat quick on this, because we can send this out to everyone, Robert. So
sure. And, you know, this is all, anytime I vet a company, and I personally vetted, you know, all of my clients, I don't just ship them to anyone. You know, you go through, and it's just all about asking the right questions. And I found that these business owners really come up with some good, well thought out impacts.
I mean, I can't imagine any bankruptcy firm whom we're talking to now not being, I mean, all they have to do is look at the filings, right? I mean, I'd
be shocked.
Yeah.
No, I'd really be shocked. So Now, interestingly enough, how the PPP and the ERC interact is that when they first came out with this, again, as I had mentioned before, the PPP would knock you out of qualifying. Now you qualify, but you can't double dip. And that goes for another section that's not mentioned here, and that's any R&D grants that some companies get as well, but usually that's de minimis. But what I mean by you can't double dip is any money that you get from PPP that's offset or will be offset off of your tax refunds. But interestingly enough, the employee retention credit is typically a dollar amount of a refund way bigger than the PPP. So it's not going to have any super huge impact on your refund, but it will impact it. It is offset. You can't double dip. You can go to the next page here, Phil. Now, figuring out how many employees you have is critical. I mean, if you have more than what would be considered more than 100 full-time employees, you don't qualify for 2020, and it's 500 employees for 2021. So I think most of us here that probably wouldn't apply, so we don't need to talk too much about that. But if anybody has any questions, again, how that's figured out, we can come back to that. We can go to the next page, Phil. Page 15, thank you.
Yeah.
So aggregation rules, those are relative to franchises, typically, how they would be aggregated, and that's probably not indicative of this conversation we're having. And then we can go to page 16. Page 16 is how our law firm works as far as representing people in the employee retention credit process. And I co-counsel with tax law firms that we'd start with an engagement letter with any client. That's a client services agreement, a retainer agreement. Now, interestingly enough, the retainer agreement will reflect that if there ever is an audit on the 941X amended returns, that law firm will cover that audit. I've kind of two-tiered this, where I'm working with one heavy hitting law firm for most of my files. The other ones, I have another tax law firm that would be a bit cheaper, and those are for the individuals that there's not a lot of risk for an audit, because I didn't want to just throw any of my clients or my clients' relationships to the wolves. So I kind of have this two-tiered. And I just kind of make that call along with the client on which route you want to go. The client services agreement for one covers an audit, the other does not. And then after the client services agreement is signed by the client, we do data collection. Basically, you need four things. You need information on the business. And this is not as painful as the PPP loan application, if any of you out there are thinking it's similar to that, but not as painful, I can assure you that. So we need information on the business, just vitals, EIN number, address, formal name, owners, etc. And then we need the payroll information, which you can very easily download from your payroll company if you use ADP, whatever. And then a copy of your PPP loan document, and then income statements. And then all of that information is analyzed and then put into a portal, and we process the 941Xs from there. Now, the nice thing is we can get these 941Xs out within about 7 to 14 business days, depending on which route we use, which tax law firm. And then those 941Xs are emailed to the client. The client has to wet signature them and email them back. I know that doesn't make any sense, but that's the way they work. And then we file them, and then you can expect a check in the mail in about 5 to 12 months from the IRS as a tax refund on your 941 tax returns. And typically, again, those periods are the last 3 quarters of 20 and the first 3 quarters of 2021. Now, what we charge to represent clients is a 10 to 20% management fee, depending on as a contingency fee. So we don't get paid until you guys get paid. And you guys, I mean any clients that we represent. And then once you get the check, the client pays our law firm. Whatever's left over, you have to pay taxes on, because that goes back into your coffer as revenue. Does that make sense? And that's it. That's how the ERTC works in a nutshell. And
Robert, I got a couple questions here. One, so Eric mentioned, what if you have three part-time employees, or had three, it changes, but he had three part-time, now two part-time. Does that count as full-time, or how's that work?
oh, all right. Well, we know that this individual would qualify because they have less than 100 employees for both 2020 and 21. Now, the nice thing is that when you're discussing what wages you get to use to get the refund, part-time employees are included.
Okay.
So if somebody's got 2 or 3 part-time employees, they would, qualify for likely some type of refund, assuming they met the revenue test or the nominal business impact test.
Got it. And Eric, I'm sorry, they were full-time, but they just shifted. There were 3, then 2. Any other questions you have for Robert? I'm going to put Robert's information on the screen so you can reach out to him directly if you have questions, phone, email. But what questions do you have? You can unmute yourself and ask him directly, or send it to me in the chat, whatever you prefer. Robert, while we're waiting on those questions, talk about what you've done personally, just in terms of thinking who you knew that may or may not have known about this. So we talked about earlier, easiest PI, this is infinitely easier than a PI referral. Talk about the example you gave me about your, like the tractor friend, right? The guy who ran the tractor, owns that tractor company, right?
Oh, yeah.
Let's just give some ideas about, bankruptcy business is hard right now. I mean, if they can, if it's an easy setup and it's helping the client, that's the purpose.
I've been practicing law for 32 years, and every once in a while you get that diamond in the rough opportunity that passes your desk. And this is probably 2 diamonds in the rough. And for many reasons is that it's a win-win-win for anybody that would refer us clients for our law firm, and particularly for the business that, these numbers are staggering. I had a good friend of mine refer me one of his good friends. He owns a truck and trailer sales company, Big Rig. And I'm going to give him $1.6 million in a refund. The numbers are just staggering. So, I've reached out to all my friends, relatives, asking them to refer me folks, businesses that they know. And when I tell these people what numbers are involved, they aren't shy about reaching out to their friends or relatives or acquaintances, because they know that they're really putting a feather in their cap. And so I've kind of approached this from a 2-pronged perspective. One, friends and relatives, and particularly I've reached out to all of my attorney friends who are referring me clients, and I split it. I pay out 1/3 of whatever Hoagland Law receives. I have one law firm that is going to get upwards of $60,000 in referral fees in the past 2 weeks, and that's off of 3 clients.
Yeah.
And I close probably 80% of the people that I refer. So there's Jody behind me making a bunch of noise, but it's after talking to you, I was talking to a buddy of mine. Hey, do you know about this? People don't know about it. Eric Ronke just sent me a chat. I want to say I greatly appreciate this. I talked to my CPA on this a week or 2 ago. He said I would have to have a 50% reduction. So he wasn't aware of the nominal business impact test. That's the problem. Yeah, I agree. Well, I'll tell you my own story is I remember last year, it was around April, May, met with my accountant in my law firm, and he had mentioned, there's something about this employee tax thing. I'll look into it for you. And never heard from him again. And now that, I've been studying this part of the tax law for, oh my gosh, last 8 months, and diving into it, I totally bypassed him because obviously he didn't know what he was talking about or doing. And had our tax attorneys, prepare the schedules, and I received a very, very large sum of money for our law firm. And,
Robert, what do you want to, like, how do you want the introductions? Do you basically do you want people to talk you through it first? Like, how do you want introductions? What works for you?
introductions in what respect now?
Like if they know a friend who
yeah, well, I
wants to
can say,
talk to you
here-
about this, or if they have a question, obviously if they have a question, they can call or email you directly.
Yes, absolutely. And if you're intending on referring us clients, I could certainly send something out in writing that we pay a third. I have no problem with that, and along with some information and my contact information. I guess just to start from the beginning, the best conversation you can have with an acquaintance that owns a business is first question, have you heard of the employee tax credit? And see if they're going to be, yes, I have, and I applied, or yeah, I've heard of it, but that's, and my accountant might have told me something about it, or they don't even know what that acronym means, the ERTC. And if it's the latter of the two, where they've heard of it or they don't know anything about it, I always use the 3,700 rule, just based on one of the first clients I retained. And that is for about every 30 employees, you're looking at about a $700,000 tax refund. Give or take 100 grand. And when you do the math, and I think the second question would be, if they haven't heard about ERTC or just know a little bit about it, the next question is, how many employees do you have? If they say 15, you say, well, you could have about $350,000 in a tax refund sitting out there. And if that doesn't grab a business owner's attention with 15 employees, I don't know what does. That's the key, because they have no idea. I mean, hell, I didn't know how much was sitting out there for us. I had 100 employees. And, and my accountant mentioned it to me. I thought, oh, okay, I got $5,000 or $10,000, get to it when you get time. I didn't know it was $1.5 million.
Yeah.
It's just crazy.
Especially in our down market.
Yeah.
What question do you guys have for Robert? If you have questions, feel free to open your video, unmute yourself, ask questions. I mean, this is just an opportunity for us to hash it out. Anybody? There we go. Eric.
I didn't really have a question. I was just mostly going to say the kind of what I said to you, that this is great information, and it's kind of, it was an interesting topic, because like I said, I just had that conversation with my CPA, and the fact that, I mean, he's 20 years of experience, he's pretty on the ball, and he had no idea. So this is great stuff. And I just told Phil that he needs to put you and I in contact, because I've got a lot of people I can probably reach out to work together on. So we'll be in touch.
Oh, for sure. Well, that's what's nice about sharing fees with firms. We can pay a third of a third, and these attorneys that we co-counsel with as well are very, very good. So you have two sets of eyes on it. The same with the attorneys with my law firm. They're very, very good at this. And like I said, it's got to be done right, especially under the nominal business impact test. You don't want, I can see where accountants are scared to death of this. I really can. And I think a lot of them just kind of pass it on as, well, you don't qualify. And really it's, well, I really don't know this very complex area of tax law.
I'm just curious, of the people on the call, and we have some large filers on the call. I mean, how many of you were aware of this? Anybody? I mean, has anyone applied? Anyone got approved? I'm just curious as like a James, do you have feedback on that?
I just rejoined it. I had to jump out for another meeting.
Okay. Yeah. Did anybody on the call? I mean, like I said, large firms. Anyone apply? Anyone know about this? Just anything. It would just be curious to hear.
Oh, I did hear at the beginning of it, and it sounds like that you need like 3 or more employees. Is that, am I right about that?
Correct. Yeah, 300 to 500 W-2 employees, not including owners or relatives.
So probably for most of us, who are small law firms, it wouldn't matter.
Well, it depends on what small is. I mean, I know I just represented a firm with 7 employees, and I think they got 60, 70,000. Another firm with 3 employees, they got 40, 50. I mean, it's all relative to how many employees you have and how much those wages are too.
Yeah. But more importantly, James, even though you may not have 3 employees, you have relationships with people that do, right? And you're a respected lawyer, you're a respected counsel. You just never know who you know. And it's a lot easier, that type of, participation in the legal fees, a lot easier than, finding a PI case or anything like that. That's my point. That was
Okay.
the whole point of this call was twofold. One, to give an opportunity for the people that don't have it, right? Second is the opportunity or that haven't been approved and have that can be approved, like Eric Ronke. The second opportunity is for the people to make money. I mean, even like last strategy call last week with the student loan, or last month with the student loans. I'm just trying to think of like ways that we can bridge the gap to add extra value and extra revenue to you without really changing much of what you're doing. It's not like you're starting to do Social Security and disability. This is a nuance that you're already in these conversations. That's the point of it. And
All right.
and I'm sorry, did you want to say something, James else?
Oh, no, I'm understanding it.
I just got another chat, Mike or Robert. Last week, someone else talked to CPA. They said they did not qualify. So, it's just something to look at.
Absolutely.
Anyway.
And you're going to hear that from a lot of people you talk to, is they had an accountant tell them they didn't qualify, or relative to their reading of the statutes, acts, or otherwise, they don't think they qualify. And most of the time, it's just simply not true. Or they think it's some kind of scam. I'll give you a good example. Two, there's one of just as an awareness, for myself. I drive by this power equipment company every day when I go to work, come back to work, and they sell John Deere implements, ATVs, snowmobiles, things of that nature. And as an awareness thing, about the 50th time I drove by, I said, well, I know the owner. What the hell am I thinking? So I drove in there, talked to Roger, the owner, and I just met with him this morning. And he when I first went into the dealership, he says, well, I've heard of that. It kind of sounds like a scam, and he's the owner of a $10 million a year outfit. And said, well, Roger, it's not a scam. I'm an attorney. I wouldn't be talking to you about this if it was scamish. And said, just, lend me your ear. I'll call you next Tuesday at 10 a.m. So I called him at 10 a.m. this morning and walked through it with him. And he's in. He's got, 12, 15 employees. I'm going to probably get him about $300,000 of a refund that at the end of the day, after taxes and otherwise, he's going to put about $170,000 in his pocket.
Yeah.
And it's, again, one is just an awareness thing. And two, he, thought it was some type of scam or otherwise. And there's a lot of bad players out there in this market right now too. They're charging exorbitant fees and claiming they have all these specialists and blah, 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 and who the heck knows who's, putting these 941Xs together. But like I said, with our law firm and our tax law firm, we got 2 sets of eyes. We measure twice, cut once. And
Hey, Robert,
go ahead.
To finish this off, unless we have more questions, when does all this end? Like, when does the funding run out? Does it have to be done by the end of the year? Like, what's that?
Who knows? Yeah, nobody knows how much money's sitting out there yet. It could end tomorrow, or it could go through the entire, statute of limitations to amend a 941X, which I think is like 3 years for 2019 and for 20 and 4 years for 21.
Mm-hmm.
So who knows? I wish I had the answer to that question. But I think better to be safe than sorry. And what I like about working with our firms is they can kick these amended tax returns out in 7 to 14 business days, not 7 to 14 months.
Great. Any final questions before we end the call? Questions, thoughts, feedback, whatever you got. Okay. Oh, Susan, hey.
Hello. Yeah, thanks for the information. That's very interesting. Unfortunately, I had to jump off for a call for some of it, so I just missed procedurally, and I will go back and I will view this, but just a quick question while we're on the call here.
Yeah,
Um,
please.
If we have someone, like even myself, I did have 3 employees for, a couple of those years, and I would like to check that out. So are you recommending that we contact our accountant and ask if they're familiar with it and then proceed and contact you? Because I also have clients that I'd like to throw it at, to see if they know about it. And am I directing them to potentially just speak with their accountant and then put them in touch with you directly, or how are we doing that?
Well, not to seem self-serving, but I would, like those folks to come to us because I think they're going to be, I don't know, it's kind of like you've heard of the bankruptcy preparation services versus using a bankruptcy attorney. I mean, not to dig on accountants, but I've just seen them drop the ball on this stuff time and time again.
Mhm.
And I've hit on 1% of the complexity of putting these tax returns together. And the tax, for the amended tax return. So I would not recommend going to an accountant on it. And I'd be more than happy to give these folks a free consultation. And if they felt that, from a cost benefit analysis, that they wanted to utilize our services and get it done right, and have the audit protection, then that's their, and I always tell clients, this is your cost benefit analysis. This is not mine. I just give you my opinions and where I think this is going to go at the end of the day. And I treat all these folks with kid hands. So again, not to seem self-serving, but I just assume nobody, from what I've seen out there, throw a lot of folks to the wolves because it may not get done. And when are they going to get it done? The accountants, how are they going to get it done? And it's even if you have 3, 4, 5 employees, I don't see a benefit of using an accountant when you have a tax law firm available that's going to do it right and do it quickly. So hopefully that answered your question. And again, I did not want to seem self-serving. That's just kind of the reality of the situation that I've seen.
Understood.
So, Susan, I put this back on the screen. You may have been off. You can see Robert's information there, right?
Yes.
So, Robert Hoagland, Robert at ERTCfunding.co, and then the phone number 612-482-3010. And I mean, many of you are going to have questions that you don't want to talk about right on the call. I mean, you can just call Robert and, and talk him through stuff. I mean, he's been on other strategy calls. He's a longtime client of 720. I mean, he's very approachable, and as you can tell. So, I mean, anyone on the call, that's the type of guy he is.
Mm-hmm. Yeah. Any questions you guys have, and evening, weekends are fine. I would actually prefer that because it gives us a little bit more time to talk things out. And if any of you have questions or otherwise, just reach out anytime.
Thank you.
Yeah. Great. Any other questions for Robert?
Yeah, Phil, Eric here again.
Oh, sure.
Robert, and I messaged this to you, Phil. I'm just a little bit confused, and I think I maybe just heard it wrong one time. Do you have to have had 3 full-time employees outside of yourself, or is it just under 100 or under 500?
Well, it's under 100 for 2019. I mean, you have to have 1 or more, obviously.
Okay.
I just use 3 as an earmark because most people have 3 or more that not many people.
So for example, like I had myself plus 2 for part of the time, and then I had myself plus 1 for another part of the time. And so I'm just kind of curious as to, does that kick me out, or am I still eligible? Just because I heard you say 3, so that's why.
Oh, yeah, you're still, I think technically, you're still eligible, but you can't include yourself or any relatives. So whatever you have left over for those periods of 2020, 21.
Perfect. Well, I sent you an email already because I've got tons of people in mind for referrals that I want to chat with you about. So I'll chat with you more later on that. So thanks for answering that question, and thanks again for doing this for us.
Oh, yeah, you're welcome. Thank you.
Well, Robert, thanks again. This is great value add. And I hope that, that it works out for many people and for our partners. And I appreciate you taking the time, and we'll go from there. So on behalf of 720, on behalf of Robert Hoagland, thank you for joining. And if you have any questions, let us know.
Yes, thank you, everyone.
Thanks, bye. Bye-bye.
Bye-bye.